Hello guys, and welcome back to another video by Vertex Investing. So I know I said in the last video that I won't do one until after Christmas, but from the feedback from the previous videos, there's been many questions, and as you know, my time is for my students that join Vertex, but I want to try and make things as clear as possible for you guys, and hopefully that these breakdowns, well, from the sounds of it, that these breakdowns are being useful for many of you. So I'm going to go through this. This is the last trade of the year, so it's quite a nice way to end this year for video wise for YouTube for me. But I want to give you a breakdown of CAD yen. Now this was shared in the free group, and I'm going to give you the thought process behind it, where to begin, how to understand the structure of it, and then why I closed it early and what I would have done. So if we go through it to start off with, so if we look on the daily, obviously it's very bullish. Now what you need to understand is, even though you got a bullish trend, it doesn't mean that you can't sell. Why? Because you have to understand, with every impulse there's a pullback, right? There's an impulse correction. That's just how the markets work, which you can see here. Impulse correction, and so on. So you have to understand that there will be pullbacks. Now, for a pullback to happen, you have to understand that there has to be a shift in market structure, which is why I looked on the hourly. Now, in terms of market structure, there is quite a lot out there that you guys can learn from. I'm not going to teach you how I see market structure because it's a little bit different, but essentially, but if you go through the basic method of seeing it, you just have to understand where the highs and lows are. So obviously you got the high here, and then if you look what's happening here, we've got a low being created, a pullback, and then it broke again, and then another pullback, and then it broke structure again and created a low, and so on, right? Now, why did I pick this OB? Okay, so hold on, did I just skip a step? No, I didn't. So I explained the daily. Obviously it's bullish, and I know that. And then what you have to understand is, when you're looking at the bullish, you have to find where you could potentially buy from, right? Now obviously if I set my alert either here or here, because I don't enter directly off an order block like this, how I'm showing you now, but you have to identify where price can actually reverse from, right? And this is the reason why you don't need a massive stop loss to determine that, okay? Because our strategy, we can define when a trade is reversing, and that's exactly what we do. Okay, we don't do anything special, we just understand the markets, and that's what I want you guys to start doing, okay, regardless of what strategy you are using. Now what we can see is, obviously price can obviously react from here, as that's the last order block before the bullish impulse that broke this structure, this one, and this one. Actually it didn't really break that structure, no. So, and we've also got an order block here which obviously created an impulsive bullish move, right? So you know the price can either pull back to here and react, or pull back to here and react. I don't see anything here for it to react to from on the daily. But if you go to the 4 hour, there wasn't anything special, to be honest, on the 4 hour, for me personally, for me to say anything from. But if we were to support where to buy from, this whole move that broke this structure started from here, right? So that's where I'll be expecting to look for buys, and that ties in with the daily order block that I already marked out there. Well, actually no, I took the marking off, but the one that I showed just previously. Now, this is only an intraday trade, okay? That's one thing you have to understand. Whether you're looking for swings or intraday, you have to be realistic with your targets, and realistic to what you expect the trade to do, because you shouldn't expect, for me to enter this trade, I shouldn't expect to catch thousands of pips. I don't even count, I don't know how many pips this dropped. Oh, 80. All right, so you don't expect to get thousands of pips from a counter trend. You have to remember, it's counter trend on this lower time frame, whereas the higher time frame, if you're going pro trend, then you can hold the trade for as long as you feel you want. You know, that's completely up to you how you want to manage your trade. And to be honest, that's a very good video for next time. I'll do a video on that. So if we look on the hourly, and this is the trade, this is the time frame that I took the trade off. Well, not exactly, but this is the time frame where I took my bias off, because it was the clearest one for me. Now you have to remember, for market structure, you have to understand where the structure break came from and where it's been mitigated, right? So obviously we got a structure break here, which broke here, and we've got an order block sitting right there. Now I didn't see that, so obviously I didn't enter, but that would have been a very nice entry point, and obviously broke even there, and then obviously carried on and held until your target, right? Now what I did, because I missed that initial move, obviously we've got the next structure break which happened here, and the order block that it came from is the one that's highlighted in pink here. Now if you were to enter the trade using the free strategy taught in the webinar, what you would do at this point is, now that you highlighted your point of interest and you've got the story behind it, you know that it's got no need to come up here. Now some of you may be questioning, why didn't I think of this order block? Oh, why did I not mark that? You'll be questioning, why didn't I think of this order block up here? The reason being is because the last structure point is here for me. Now it didn't break that, so this order block did nothing, so it's not an order block in that sense. But if we look here, it's created a low, pulled back, and then broke structure. That's a very valid order block in that sense, because it caused a structure break. And that's what you need to think about, is when you're looking at your order blocks, it has to break structure, otherwise it's not an order block, okay? And that's probably one thing that's a very good scenario for me to show you, because you'll see that quite often. And some people may be looking to, some people might still be waiting for price to come here, but it just won't. If it does get there, it won't react, it'll just go, okay? But yeah, so that's why I picked this order block. And as you can see, it's very clear. Now I just realized how fast I'm talking, so I will slow down for you guys. If I'm talking too fast, obviously on YouTube you can slow it down. It may make my voice a little bit weird, but just slow it down. But I'll try slow down from now on, so I do apologize. So all right, if we're looking at this order block, obviously if you're going to enter off, there we go. If you're going to enter off the free method, what you'll do is you'll just refine that. So I'm going straight to the 1 minute, because you guys should know what to do from now. Just flick through the time frames, but I'm just speeding up the process. And what we can see here is trying to understand where the last structure break was within this, okay, and which OB caused this and which one is clear. So if we look at what's happening, this is the last structure that's formed, okay, because obviously we've got minor structures here and here which broke, and all of these ones were already mitigated. You can have an entry here, for example. But if we're looking at from this point, okay, this structure was broken by this OB here. And what can we see with this OB? It's not been mitigated. It's a very clean OB to go off, right? Now, surely there's a quicker way to get rid of these all in one go. I'm sure there is. But anyway, so we're going to mark out this order block here, there, and your stop loss is just going to be above there. And if you go to the hourly, let me just hide my one for the moment. And what you'll do is you're going to set your order. So you're going to set a sell limit. Where did it get to? It was somewhere here. Sell limit there. Your stop loss is just going to be above. So, oh, this is quite a tight one. So you could have had a 2 pip stop on this one, to be fair. And I only had a 1 pip stop. So you could have had a very solid trade on this case. And then in target wise, obviously you're going to have to monitor the trade. In terms of your target, you'll be looking at where it could possibly get to. But for me, I had my target here. Yeah, about there. Now, the reason being is because that's the last pullback before the impulsive move, and you could expect price to react off here. Now, I had it marked here just to monitor price to see if it reacts to this order block, but price didn't. It just broke it, which was fine. But yeah, it is what it is. Well, I just closed the trade early, which I'll explain why. So if I just play this trade out, when it eventually gets there, so we got a perfect trigger, very minimal drawdown, and I don't know if it reached that TP or not, but we just broke through. No, he's only reached there. So obviously we broke through the first that order block that we were concerned about. So we had nothing to do there, and we could just carry on holding the trade at this point. I didn't, purely because it was Friday and I saw this big stall. I moved my stop loss just above this high, so I got very close to be taken out. But I didn't. I was fine. Let me put my order back on now. Now that you've seen what you could have done, let me get rid of your one. There we go. So that's what I've done. And as you can see, so yeah, I just literally closed it because it was Friday and it was my last trade of the year, and I just wanted to close on a high. So I closed for ATR, whereas the trade that I just showed you, so not that one here, the trade that I just showed you, which would be your one, you would have hit, if you closed the same as me at the same point, you would have closed 40R. So I closed double the amount basically. And that's the benefit from our method, to be fair, because we get more refined entry. Like, look at mine. I'm not trying to show off, but barely any drawdown on mine. And because it was a sell, spread sort of came in my favor and triggered me in quite nicely. If you're in a buy and you're in this position, it probably wouldn't have triggered, depending on your broker. So that varies. So make sure you research your brokers before doing so. I don't represent a broker at all, so I can't really advise one, but it's up to you. What you have to do your own research on that. But as you can see, that was the entry point. You would have had, I think, less than I don't know what drawdown that would have been, 0.8 pip drawdown only, right? I had nothing, obviously, but it's not always like that. Sometimes I get some really I get like at least a pip drawdown sometimes, but nothing major. But you can see the power of this strategy, right? The difference between our entry method and the entry method that I've taught you for free is, for example, say if let me just put it here, and I'll show you the difference between what happens. So okay, so obviously that's the last structure that was broken, right? Okay, so we've got an order block here and an order block here, right? Now, if you're going to use the free method, you're probably placing a order here. Now, if this one fails, you're going to place an order here, right? But what our method does is basically we get a confirmation whether we are going to enter here or whether we're going to enter here. Okay, that's the difference, is that we mitigate our losses by not entering a trade if the OB isn't confirmed, and that's what we teach in our course. But the foundation of our method is oh god, why did I do that? The foundation of our method is this. That's how it all began, and we just worked on refining as much as we possibly can to get to improve our strike rate. Because what you'll realize when you're using this strategy, your strike rate may not be great, but if you use your method, let's see, if you use the method, where'd it go? Did I get rid of it? Oh no, I think I did. Say for example, okay, the last trade, the trade that you would have taken from here, you know what, I'll just draw it back on to make things visual for you guys. So say we closed at the exact same position and you had a 2 pip stop, not a 27, there we go, 2 pip stop, so you got 40R. You need to lose 40 trades to be back at break even, and that is the power of this strategy, right? And what you need to realize is our method is completely rule based. Once price enters here, we've got a rule based entry system. So what that means is we take away the discretion when it comes to trading, because you will never see a chart from us. Say for example, let me just draw a trend line here, a very bad trend line, might I add, and just do a trend line here. You will never see us say, okay, price, okay, so we've got 1 tap, 2 tap. You'll never see price, you'll never see us say this price can do this and then drop from here, or price alternatively can break, bounce and go. You'll never see us show two ways that trade can go. Why? Because that's uncertainty. We know, we define the direction, we know where it's going to go. It's just a matter of finding when it's going to react and the entry point. That's exactly what it is. And the reason why, for example, say if you're saying, okay, that's going to be the third tap, right? Your stop loss is going to be above the high, or or you might even put it here. Okay, you probably won't put it there, but that's just exaggerating. But it's to show you that you're putting it there because you think it's going to probably lines up with a fib. It looks like it would, to be fair, and probably lines up with the MA50, whatever you use. So all the confluences are there, but you're basically guessing that price is going to react there. Whereas I can't see an entry point here at all. There's nothing here for me to say price is going to react to it. Yes, there's an order block here, right? And this is the power. So say, for example, if price does come here for the third tap, they're probably thinking, when the price comes here, they're probably thinking, oh yes, we've got a very good entry. But then there's an order block sitting right above it. What can happen is sometimes price can get there and then react, because this order block broke this structure, this one, and did it break this one? Yeah, it did break this one. So it still caused this move, right? So price can still react off it. Price can come back up and mitigate it. And it just shows you the theory behind this method, and just shows you how it works. And the benefit of having a rule-based system is essentially just taking away the discretion, and with that it takes away the emotion that comes with trading, right? So if I do a recap of how to get this trade, so if you start off from the daily, we understood already that we're trading a pullback. We know that price can react off here or here, or even potentially here, but I doubt it, to continue the bullish move up. That's what we already acknowledged, right? So we're trading counter trends, so we have to be realistic with our trade. If I go to the 1 hour, we know that we've got a structure break, okay, a bearish structure break here and here. That confirms our trend, so that's number 2. Okay, so this is telling us the direction that we're going to go in. Number 3 is finding your order block, which is here, and number 4 is refining that order block, and then number 5 is placing the order. And then number 6 is trade management, and how you do that is completely up to you. A very good method is, obviously, you need to remember, even though the strategy is laid out for you, it doesn't always play to plan, right? But when you get a first structure break here, it's good to probably take partials here, or you could potentially just trail your stop loss. It's completely up to you. I didn't trail my stop loss until we got close to this OB here. That's when I started to just move my stop loss here, because I saw this bullish move, and I don't want to give back. That would have been 40R for me here, so I would have to, that means I'll be giving back 40R to the market if it hit my stop loss here, right? I'll be giving back 40R, which is not nice at all. So you have to make sure you pay yourself first, okay, and be comfortable with that. Taking partials here is a very good place to do so, because obviously, although because price can just react off an order block here and then carry on going, right? We don't know, but we've got the bias of the higher time frame telling us that the higher time frame being the hourly, telling us that price is bearish at the moment and it needs to pull back. Okay, so that's how we enter the trade, and you just place the order. The difference is the difference with our entry method is that we achieved double the risk to reward. I closed it early, but I think it was getting close to target. Yeah. So I closed it early purely because it was my last trade of the year, and I just wanted to get it done, and it was Friday as well. Here is the screenshot of the trade, which you can see here. So I was actually in, and again, this was shared in the free group. Now, what I'm going to do for you guys following the channel, and for you guys in the free group, is I'll be making a PDF where it will be a step-by-step method on how to use our free method for you guys. Hopefully that will answer a lot of your questions, because as you know, I cannot answer your questions. My time is for my students, and I'll always support that. Now, I do reply to DMs, but I won't give you support, and I just received a lot of DMs today, and I wanted to do this video to make it clear for you guys, and hopefully it clears up a lot of questions. But this will be the last video of the year from us, from Vertex, and hopefully we've got some new stuff coming in the new year. We do have our bootcamp. We do still have spaces on our bootcamp, and also pay attention. We do have a giveaway as well that I announced yesterday, so be sure to check that out, and also be sure to look out for any discount codes that we have for our trade membership as well. But for now, I'll leave you guys be. I hope that you guys found value in this video. Feel free to drop a comment and a like, and make sure you subscribe. Make sure you join our free Telegram group so you don't miss out on the free PDF that will give you a full guidance on how to use the free method. And I just want to make it clear again, the free method is not how we personally trade. Our entry is just a little bit more confirmed, and that's exactly what we'll teach you when you decide to join. And you'll get entries exactly like this, you'll get entries exactly like this. And what we'll do, you'll notice that you'll get an increased strike rate. And when you learn to trade with discretion like we do, because it's a fully rule-based system that we have for our entries, you'll realize that the emotions that comes with trading, will be a lot more controlled. But for now, I'll leave you guys be, and I hope that you have a very good Christmas and Happy New Year.